Good morning. I call this hearing to order. We have reviewed the CFPB's semi-annual report and are here today to conduct regular oversight of the CFPB. This includes making sure that the agency continues to fulfill its mission of protecting consumers and empowering them to make responsible financial decisions, promoting fair competition in industry, and ensuring full access to financial services for all Americans. Director Cordray, welcome back to the committee. I know you share my commitment to transparency and accountability. In fact, this is the 32nd time that a CFPB official has appeared before Congress in just over 2 years, and your 13th appearance. Rightly so, your agency's outreach and engagement with both consumers and industry representatives has been widely praised. The CFPB has made significant progress in protecting consumers, including students, service members, and older Americans. For example, the CFPB has developed a number of tools related to student lending, including the financial aid shopping sheet that will help students make the best choices as they pursue their dreams. And since the CFPB opened its doors, it has obtained $425 million of consumer free funds. That is $425 million back into the hands of harmed consumers and back into the economy. Earlier this year, the CFPB finalized rules to strengthen mortgage standards. This includes the ability to repay provision, which requires lenders to make a good faith effort to determine whether a borrower can make his or her payments. These rules have been generally well received by consumer and industry groups alike, and I applaud the care the CFPB undertook in writing these rules. However, we must ensure that these rules do not have adverse impact on lending in underserved areas, including rural areas. I look forward to hearing from Director Cordray on how this rule will impact rural lending, which is an important issue for many in South Dakota. Finally, Director Cordray, you have made comments about reducing regulatory burden on community banks and credit unions. I continue to be interested in your plans to make sure that rules strike the right balance, protecting consumers while addressing legitimate concerns smaller institutions may have. You have proven day in and day out that you are well qualified for your position. Even my colleagues across the aisle concede this point. I hope we can provide the market the certainty it needs and consumers the cop on the beat they deserve by confirming you quickly. Thank you for your service. I look forward to our ongoing work with you. With that, I will turn to Ranking Member Crapo.
Thank you, Mr. Chairman, and thank you, Mr. Cordray, for being here with us today. I appreciate it. Mr. Chairman, the semi-annual briefing by the Consumer Financial Protection Bureau is very important to us to gain insight into what the agency is doing. As I've consistently stated in past hearings, we still have concerns with the structural nature of the agency. We continue to seek a change from the sole directorship to a board-like structure. It is also essential that the agency be a part of the appropriations process. And finally, we believe that the prudential banking regulators should have a formal input into the Bureau's action where those actions affect safety and soundness. And with regard to the President's recess appointment to the CFPB last year, my opinion has not changed. I continue to believe the recess appointment was unconstitutional. Recently, agency officials have pointed out that they've testified more than 30 times before Congress in the past few years. And while this does give Congress an opportunity to hear directly from agency officials and is appreciated, it does not necessarily facilitate the in-depth discussion of the specific issues and concerns that we need. Just last week, Bloomberg ran a lengthy article citing that the CFPB has allocated more than $20 million for collecting and tracking customer credit card and spending habits for more than 10 million Americans. The size of this data collection and the amount of money being spent by the agency are a cause of concern for me, and should be for those Americans whose credit cards, checking accounts, and other financial data are being sent monthly to the CFPB. Last month, I specifically asked the agency about this data collection, but the responses I received downplayed the nature and extent of it. For example, I asked how many consumer accounts the CFPB is monitoring, and the agency declined to provide that information. Now we learn from the press that it is 10 million accounts, and perhaps even more. This lack of candor and transparency of what the agency is doing and how it intends to use this personal financial data is troubling. The Bureau is founded with a mission to watch out for American consumers, not to watch them. Given that the CFPB's Inspector General has already identified data security issues at the Bureau, how can the consumer be assured that this information is indeed safe? With regard to its regulatory role in the past 2 years, the Bureau has issued numerous new rulemakings resulting in significant cumulative burden for affected institutions, especially our small and community banks that often have just a handful of employees. In January alone, the Bureau finalized over 2,500 pages of new rules relating to mortgages through 7 different rulemakings. I'm concerned that without strong cost-benefit analysis and input from small business panels in crafting rules, even well-intentioned rules could make consumer credit more expensive and less affordable. That's why at 2 separate hearings last year, I encouraged the CFPB to conduct a small business panel on the proposed qualified mortgage proposal to try to minimize unintended consequences. Many community bankers now warn that despite limited QM exemptions for smaller institutions, they will no longer offer any mortgages outside the QM criteria, which will restrict their ability to meet the mortgage needs of the communities they serve. Another issue concerning the agency has been identified by the agency's own ombudsman, who recommended the CFPB needed to review and clarify the role of enforcement attorneys who attend supervisory exams. I look forward to hearing from you, Mr. Cordray, about how you plan to address the community bank concerns with the QM rule and how the CFPB is implementing the overall ombudsman's recommendations. Specifically, I would like to hear how the Bureau is handling the examination concern raised by the ombudsman, as well as whether the Bureau is concerned about the effect that the sheer presence of the enforcement attorneys may have on the integrity of the examination process. I firmly believe that if the structure of the agency were changed, then it would become more open and transparent, and many of these issues would not need to be raised by members of Congress. It's my hope that the Congress will move quickly to address and pass these reforms so that the Bureau can do what it was designed to do, and that is to protect the American consumer. Thank you, Mr. Chairman.
Thank you, Senator Crapo. Are there any other members who wish to make a brief opening statement? I want to remind my colleagues that the record will be open for the next 7 days for opening statements and any other materials you'd like to submit. Mr. Richard Cordray, as Director of the Consumer Financial Protection Bureau. Welcome back to the committee, Director Cordray. You may begin your testimony.
Ranking Member Crapo and members of the committee, thank you for inviting me to testify today about the semi-annual report of the Consumer Financial Protection Bureau. My colleagues and I are always happy to testify before the Congress. And Ranking Member, I would hope to have a chance to address each of the issues you raised in turn. If that requires several rounds of questioning, I'm happy to do it. I think there are good answers to all of those issues that you raised. Born out of the worst financial crisis since the Great Depression, the Consumer Bureau is the nation's first federal agency whose sole focus is protecting consumers in the financial marketplace. We're dedicated to improving the lives of everyday Americans and to restoring trust in consumer financial markets. The semi-annual report we're discussing today embodies our work over the last 6 months of 2012. The report illustrates the ways we're using the tools Congress has provided us to empower consumers and promote a fair, transparent, and competitive marketplace for consumer finance. We've taken steps to improve the workings of markets, particularly those in which consumers cannot choose their financial service providers. One such market is debt collection. Concerned about system-wide problems that pose risks to consumers, we gained authority at the beginning of the year to supervise debt collectors directly. The debt collectors covered by our supervisory authority account for over 60% of the industry's annual receipts in that market. Bad actors in this market are a detriment to consumers and to every debt collector that does operate lawfully. We also expanded our supervision program to include the larger credit reporting companies. Credit reports have a profound impact on people's lives. Previously, these companies were not subject to any federal supervision, and consumers often struggled to get errors resolved. In addition to our new supervision program, we began handling consumer complaints about credit reporting issues, all of which will open a clear window into the actual operations of these companies. As a result, the Bureau can now evaluate whether federal consumer laws are being followed throughout the process, from credit origination to debt collection. By identifying problems and rooting them out early, we're working to try to minimize consumer harm. Our report also encompasses the Bureau's first enforcement actions, which were against credit card companies that deceived and misled consumers. In some cases, the companies targeted economically vulnerable consumers with low credit scores and low credit limits. We were able to secure $425 million in relief for 6 million consumers, and we also imposed penalties on the companies to deter such activity in the future. These actions will serve as a warning signal for anyone who seeks to profit by deceiving or misleading consumers. In the second half of 2012, we also tackled issues in the market for private student loan debt, which currently totals about $150 billion outstanding. Our studies detailed the struggles students and recent graduates are experiencing in that market. Together with Education Secretary Arne Duncan, we made recommendations to Congress on common sense reforms to ensure that the risky underwriting practices of the past are not repeated. The work I'm discussing here today is merely a snapshot of our efforts on behalf of consumers. We're also addressing consumer complaints on a growing number of financial products and services, totaling more than 130,000 to date. We've adopted comprehensive new mortgage regulations banning irresponsible lending practices that help bring about the recent financial crisis. Our ability to repay rule, also known as the qualified mortgage rule, follows the simple principle that lenders should offer consumers mortgages they can actually afford to pay back. We've actively conducted outreach on various issues to older Americans, students, service members, and others, and what we heard from them has guided the direction of our work. Each day, we take another step in pursuit of our vision to create a consumer financial marketplace where customers can see prices and risks up front and easily make product comparisons, in which no one can build a business model around unlawful practices, and that works well for individual consumers, responsible businesses, and the economy as a whole. We will continue to persist in this work, and we appreciate your oversight. As always, I'll be glad to answer your questions. Thank you.
Thank you very much for your testimony. As we begin questions, I will ask the clerk to put 5 minutes on the clock for each member. Director Cordray, in both the CFPB's servicing rule and QM rule, you provide allowances for rural areas and community banks. I've heard from several constituents that the threshold for rural lending will limit lending by small banks and credit unions. How will those rules impact lending in rural or underserved areas, and what have you done to address these concerns? More specifically, why did you select a 5,000 loan threshold for defining small services?
Thank you, Mr. Chairman. One of the objectives Congress set for us, one of the things it requires us to do with every new regulation, in addition to assessing costs and benefits is to assess impacts on smaller providers and also rural areas. So that's something that we paid close attention to with the qualified mortgage rule and the servicing rule, as you mentioned. That led us to write provisions into the rule that are specific and special to smaller providers and community banks to recognize the role that they play in some of the more challenging areas to underwrite loans, such as rural areas and underserved areas. We provided a special provision for smaller institutions that has been reproposed and will be finalized shortly to recognize that if they're holding loans in portfolio and they're operating according to their traditional underwriting models, those are good loans, and that's good lending. It's sound lending that we want to encourage. We took the original proposal that was produced by the Federal Reserve, which had a narrow definition of rural, which would have covered about 2% of the population, and we expanded that tremendously to almost 10% of the population. We have heard further comments since to suggest that we could have written that even bigger. That's something that we're looking at and thinking about as we get more comments, even after the rule has been finalized. On the servicing rule, we originally proposed an exemption for smaller servicers, many of whom have very few foreclosures, many of whom have a high-touch customer model, which is something we want to encourage, and frankly, as a model to the larger servicers. We originally proposed an exemption for those that service 1,000 loans or fewer. After receiving comments from smaller providers, and we had SBREFA Small Business Review Panel, as Senator Crapo mentioned, on that rule, we ended up expanding that to those who service up to 5,000 mortgages, and that covers, we estimate, about 98% of the smaller providers. They're exempt from significant portions of that rule. So we're trying to be careful and sensitive to not having a one-size-fits-all approach and to recognizing that smaller lenders, particularly in rural areas, are of interest to Congress, they're of interest to the market, and they're of interest to consumers.
Director Cordray, as you know, outstanding student loan debt now exceeds $1 trillion. The CFPB recently asked for suggestions from the public on how to make student loan repayment more affordable. What does the Bureau plan to do next with regard to student lending, and what do you view as the biggest risks in this market?
So several things, Mr. Chairman. Thank you for the question. It's been an active area for the Bureau and for our Ombudsman of Students, which is a position that Congress created in the Bureau. Several things, and I'll try to move through them quickly, and happy to have you follow up as you wish. First of all, for those who are undertaking the decision whether to go to college and how to pay for higher education now, we've created new tools, financial aid shopping sheet that you mentioned. That's all been folded into a broader paying for college module that's on our website, and we're rolling out to guidance counselors, teachers, parents, and young people themselves across the country right now as they're beginning to make these financial decisions for the coming year. Second, we have just put out a rule to be able to supervise student loan servicers, many of whom may be suffering some of the same problems that mortgage servicers had suffered, as we hear from consumers around the country. And we will be actively and directly examining them to make sure they're complying with the law. On the proposal that you mentioned that we put out to gather thoughts and ideas from the public about what could be done about the existing student loan problem, which is burdening the economy, as the Federal Reserve has recognized in the past month, and is slowing down housing purchases and car purchases and other things. We have received a tremendous amount of interest. We had over 28,000 comments submitted on that proposal, and we're going through those, and we're working with a number of other entities, including Treasury and other parts of the government, and of course the Department of Education, to see what can be done to help address this problem. It's a work in progress.
Senator Crapo.
Thank you, Mr. Chairman. I want to talk, first of all, Mr. Cordray, about the data collection issue that I raised in my opening statement. As I indicated, it appears that the agency is collecting data on at least 10 million Americans. In In the Gramm-Leach-Bliley Act, Congress allowed consumers to opt out of having their personal consumer financial information shared with third parties. Shouldn't consumers be given the opportunity to opt out from having their financial information being shared with the federal government as a part of the CFPB's data collection efforts?
So thank you for the question, Ranking Member Crapo. The story that I read as well, the one that you adverted to in Bloomberg, I think misunderstood a number of things about what the Bureau is doing, and I'm happy to have the chance to clear that up.
Please do.
First of all, big data is the cutting edge of analysis and research right now in every field that involves analytics in this country. IBM, the big banks, every company that deals with the public is gathering and crunching as much data as they can. I've seen figures that 90% of the data that exists in the world was created in the last 2 years. So this is happening in the private sector. It is the way of the world. The big banks know more about you than you know about yourself, and me too, as a consumer. The notion that the regulators wouldn't keep up with them in trying to do our job of overseeing them, I think would be quite misguided. Now, what are we doing in terms of gathering data? First of all, I want to stress that the data we're talking about is anonymized. It is not personal identifiable information about individuals, so the notion that we're tracking individual consumers or somehow invading their privacy, I think is quite wrong. Many of the data sources that we're accessing are commercial data sources that many entities are buying and selling the data in order to be able to analyze what it shows about the markets. So that goes to our credit card data, which comes from Argus, which is a source that is used by a number of other regulators as well as by companies themselves. The National Mortgage Database that we're putting together is all about having the data to be able to do the things that Congress requires us to do and that you talk to me about frequently. You want us to do careful cost-benefit analysis. We can't do that without good data. And frankly, for the mortgage rules, we found that we need to develop a national mortgage database so that data is even better in the future. Congress asked us to write reports. We have a report due later this year on the CARD Act and what the effects of the CARD Act has been. Cannot write a report like that and have it be meaningful and helpful to the Congress unless we can analyze the data to be able to see what the actual consequences have been. So that's the work we're doing. It is important for us to have data so that we can analyze it. We're not dependent on asking the financial institutions what they think. That's not the proper role for a regulator. And again, the data is typically anonymized. It does not go to you or me in particular, but it goes to consumers generally. But it's quite helpful and really essential to us to do our work.
Well, I appreciate that response. Let's talk about the anonymity issue first.
Yep.
My understanding from the Bloomberg article is that the CFPB has led a number of different contracts to different private sector entities to collect and store this enormous amount of data that the agency is collecting. Even if the data collected is not personally identifiable to the agency, isn't it possible for the CFPB to hire contractors to dig into this data and obtain personally identifiable information?
I don't know if that would be possible or not, Senator. I'm not sure that it would be. It certainly is not what we're doing and not what we're going to be doing. We have no interest in how did you phrase it? Watching consumers. We do have an interest in understanding how financial products and services are affecting consumers. We have an interest in being able to do the kind of very meticulous cost-benefit analysis you want us to do as we write rules so we can get them right. We have an interest in making sure that the studies and reports Congress is asking us to do to help inform your policy decisions, which are the law that we follow, are on sound grounds and that we can see over time whether the objectives you're trying to achieve are being achieved. That's the work that we're doing.
Well, I understand your point about the fact that collection of data is occurring at phenomenal rates in the private sector. I think many Americans are concerned about that as well. Mm-hmm. And the notion that the government needs to keep up with the big data trend is one that I understand your point in terms of wanting to be able to regulate those in the private sector who are themselves collecting this data. But it seems to me that there's a huge issue here about whether the federal government should now be getting in a big way into the kind of data collection that you're talking about. I see my time is up. I'll come back to this in another round and we can discuss it further.
I look forward to that. Thank you.
Senator Merkley.
Thank you very much, Mr. Chair, and thank you so much for your testimony and your leadership of the CFPB. I wanted to first ask, following up on the data question, specifically about the complaints database. And can you just share a little bit about, first, I believe that there are no names attached to it, not who complained about what, that it's anonymous, but that it gives you kind of it gives everyone a sense of what consumers are most concerned about. And if that is correct, can you confirm that it's anonymous? And second, what are the top 3 or 4 concerns that you see coming out of that database?
Thank you for the question, Senator. The database of consumer complaints, which is something that I think people are gradually getting used to, is analogous to what's been done for 40 years by the National Highway Traffic Safety Administration and has led to tremendous improvements in auto safety. And the auto companies now embrace it, although they did not at first. It's also analogous to what the Consumer Product Safety Commission is doing to make sure that the public is aware of hazards of lead in toys and other types of things that maybe we weren't aware of 20 years ago, but are probably better off now to know about and be able to protect our children. So similarly here, what we're doing is, as we receive complaints, we scrub the complaints, we remove any duplicates, we verify that there is a customer relationship between the complainant and the complaint institution being complained about. We do anonymize that data. It does not reveal personally identifiable information. It's something we're very careful about. We're required by law to be careful about it, but also I frankly think it would bring the agency into disrepute if we were not careful about it. There's a growing amount of information that yields. I think at this point our consumer complaint database, when we broadened it a month ago, we had 90,000 cumulative complaints. They're added day by day now, maybe closer to 100,000. I will say this is nothing novel around the world. In the United Kingdom, their Financial Services Authority has been publishing complaint data about banks for years. In the most recent 6-month period, they published 3.4 million complaints about the banks.
I'm a little worried about running out of time, so what are the 3 or 4 top issues of insights that have come from the database?
First of all, and frankly, your offices could probably tell us the same thing with the kind of inquiries you get from constituents. Tremendous concern about mortgage servicing and a tremendous number of complaints in that area and a lot of consumer harm. Credit card complaints, I would say what it's actually showed us, somewhat surprising to me because I remember before the Card Act, this was a very controversial area for the public. The complaints are down, I believe, and it's showing better work by the companies, more careful attention to what the Card Act now requires, and that I think our report later this year will show that there's been real progress made there. An interesting one for us and fairly new and too preliminary to have much conclusions yet to draw are credit reporting complaints. People generally are not aware of how significant an effect on their lives their credit reports have, but those that have found in a variety of errors. They are having trouble getting those errors corrected, and we're starting to hear about it as we started taking those complaints earlier this year. So this is information that is illuminating to us as we go about doing our work. We think, as a result, it's illuminating to companies about how they can better improve their processes. And I think it's illuminating to the public, who has a right to know this information and to make assessments accordingly. So I think it's good all around, and we should have more information rather than less.
Thank you. And since you mentioned the mortgage servicing is continuing to be an area of significant consumer concern, and certainly I still see that through our casework, the calls our casework team gets. Some of the issues that have been raised in servicing are foreclosure mitigation, discussions to try to make sure there's clear communication and all options have been pursued, and the dual track, which still exists to a degree. But any insights on the aspects of mortgage servicing that are particularly still troubling to consumers?
Senator, I think it's frustrating. It's frustrating to me. I'm sure it's frustrating to you and your colleagues that it is still the case, maybe less so, and some servicers have clearly improved and others have yet to improve. There's still some fundamentals, blocking and tackling, lost paperwork, people not answering the phone, not getting the single point of contact that's been promised. But I would say that the dual tracking is a great concern. The notion that somebody is working with you with the left hand and trying to get your loan modified, while with the right hand, maybe unbeknownst to you, they're proceeding to a foreclosure and undermining the work that you think you're accomplishing. That's very aggravating to people. And the new rules that we've devised that are going to go into effect in January are going to make a significant difference in this respect, and they apply across the entire market, both the servicers that are banks and the servicers that are non-banks. That's never before been the case. We met face-to-face with the top executives from all of the large servicers, top several dozen servicers last year, to let them know this was coming, to let them know the importance of this, and to take this seriously and not to wait. And I think that I would hope that over time your offices and our Bureau will hear less about these kind of complaints, but right now they remain very significant.
Thank you very much.
Senator Johans.
Thank you, Mr. Chairman. Let me follow up on Senator Crapo's questions about data collection. Where do you go to get the data?
So I would focus on three different areas. Credit card data, which is critical for us to have in order to do things like prepare the CARD Act study that Congress has required us to produce.
Right, but do you go to Visa or MasterCard?
Typically on the credit card data, and it's a different answer for different categories, and I'm reading from notes that my staff prepared for me, that we have typically been collecting this data through Argus. That is a known collector of data. It is used by any number of institutions and by other regulators, and so we're following very well-plowed ground in assessing that data.
So they go to Visa or MasterCard or whoever?
Or issuers themselves might be like Wells Fargo or Bank of America or J.P. Morgan Chase or any of those who issue cards.
Okay, you mentioned there's three, so there's two others. Where else would you go to get the data?
So the other two areas, the National Mortgage Database that we're going to be creating together with the FHFA is essential, because what we found as we were writing our mortgage rules, the mortgage data that's extant is not as good as it should be. Loan origination data is often decoupled from loan performance data, and there are holes in the data so that it's not necessarily representative of the entire market. That made it somewhat challenging for us as we went to write those rules, and we did a pause on the QM rule where we went and got more data. We were able to get more data from FHFA. They were very cooperative and collaborative with us and helped us on that. And then we put out for more comment, because we were going to be using new data that had not surfaced before, so that we made sure that the process was full and complete. But that data is being gathered over time, in real time on mortgages going forward, and it will provide a much more representative sample of what the mortgage market is doing, so that we see the problems in real time, which we could not do very well over the last decade, and it helped lead to the crisis.
And one more place you mentioned.
So the third category has to do with credit records. And in that case, we have been buying the data from the same source that the Federal Reserve Bank of New York has been buying data from for a number of years. They have used that data for a number of years to publish their report, a quarterly report that's widely quoted, quarterly report on household debit and credit. So again, we're following their lead in terms of this is good data on credit reporting, and it's going to help us have the insights to help protect consumers and understand whether laws are being followed and what the effect on consumers is of different practices.
Mm-hmm. So individuals' payment performance, whatever, is the basis upon which this mega data is created, obviously. So somehow, some way, the government is getting control of information about how people pay their mortgage or their credit card bill or whatever.
But I think this is an important difference, and I want to stress it. If by that you mean we're getting information about whether Richard Cordray is paying his mortgage and when and how, that's not the way the data works. What we're getting information about is consumers how their mortgage performs over time, but it's anonymized. It is not. I do not have access to data about you or about myself. It is anonymized consumer data, but you have to have data about consumers if you're going to understand what's going on in the consumer marketplace. There's no two ways about it. You all want us to write rules where we have careful assessment of costs and benefits. If we don't have data and information about what the impacts in these markets are, we can't do that. We can't do our job. And I think you would be quite dissatisfied with us, and rightly so.
Yeah, I'm out of time already, Mr. Cordray, but here's what I would say to you. To many people, this is going to sound downright creepy, to be honest with you. It is. And I just think people are going to be bothered by the fact that there's this federal agency that's collecting data on the behavior of people like you and me and everybody else who's paying off a mortgage, who's paying credit card bills every month. I think it's a very uncomfortable situation for your agency.
I think if people want to misunderstand that it's somehow following them individually and somehow invading their privacy and tracking into their personal lives, that's not what it is. We have to have information about what's going on in these markets. What goes on in the markets is an aggregate of consumer behavior, consumer performance, consumer harm, consumer benefit. If you don't have any information to do this work, then basically you're a know-nothing and you're not going to be able to do the work well. And I think you would rightly be very critical of us if we just operated based on speculation and didn't make an effort to ground our policy judgments in such information as is widely available and widely used and anonymized, very importantly, anonymized.
Senator Reid.
Well, thank you very much, Mr. Chairman, and thank you, Director Cordray. Let me raise an issue that's, I think you and your colleagues that are looking after our military are aware of, and that is there are military personnel who cannot immediately get on-post housing. They apply. It might take months as the list reaches them, and in the meantime, they've entered into a rental contract. And in some states, there is a severe penalty for breaking the contract. There are other states I'm aware of that actually have state laws that says if you're going on post, then the landlord cannot impose a penalty. Can you comment on how you're trying to deal with this? Because for many military personnel, this is a real serious issue.
Thank you, Senator. And I would say there are several different housing issues for service members, both active duty and their families and reservists that we have encountered as Holly Petraeus, our Assistant Director for Service Member Affairs, has been around the country and talked to and brought back accounts from folks on the bases. One of them was the permanent change of station orders problem that I know you're very familiar with, and that we worked with the Department of Defense and others to address last year, Department of Treasury, to qualify that as a hardship for the HAMP program. What you're raising is another great example of how there can be a general consumer problem, the issue of tenants who are renting, who can be affected by some of these problems. A great example is when Congress dealt with the fact that tenants can be ousted from their place that they're living because the landlord is foreclosed upon, even though the tenant may know nothing about that. It comes without warning, and they find their belongings on the street. For the military, again, this particular instance can do with change of station orders, or it can do with, as you say, trying to improve your housing for lesser cost. So if Congress is going to look at that issue, we'd be happy to supply the experience that we have seen from around the country. That's, of course, a judgment for you all to make, but I would say it's another outstanding example of how you can have general consumer issues, and then you translate them into the military context, and they still are general consumer issues, but they often are sharpened or aggravated by the particular situation of service members who often have limited choice about, they have to obey orders, they have to go where they're told, and they have to be there when they're supposed to be there.
Well, we'd appreciate working with you. If it requires legislation, I think my sense is there would be some support on both sides for this, because it has a huge impact on personnel. they could move from expensive rental quarters to on-post housing, more convenient, et cetera. And as you point out, also another dimension, sometimes it's not just getting on-post housing, it's a complete change of station, and they have to go, and yet they pay a penalty. And we will do our, I'd like to work with you on this. Let me turn to another subject, and that is, looking at the recent semi-annual report, it was disappointing to see your comments about the confusion persists around the process and requirements for obtaining mortgage loan modifications. I don't have to tell you, because we've spent a few sessions under the leadership of Chairman Johnson talking about this, the big deal, the modification deal, and now we've found just recently that even some of the people who were owed checks, the checks bounced. So can you generally comment about what you're seeing and what you can do to help in this modification issue?
So I think most importantly, and as Congress directed us to do, we have adopted new rules that are pretty comprehensive for the mortgage servicing market. They'll take effect in January, and I think the companies, I know the companies are already at work implementing them now. Frankly, they should have come as no surprise. These problems have been surfaced and publicized not for months, but for years. They're pretty common across the industry, and yet they're galling because they affect individuals. They lead to bad results for individuals. They lead to people losing their homes, which is the most precious thing that people possess, and upsets their personal finances tremendously. So I think that our rules will make a big difference. We're already also underway examining mortgage servicers on site and looking at whether and how they're complying with the law. And some of them are doing a decent job. Many of them have problems, and many of them it's going to require corrections and compliance and perhaps enforcement actions as needed. But we are now in a position as this new bureau that didn't exist before to examine the institutions directly, to ensure that they're complying with the new regulations, which went beyond what Congress required but was necessary to address the scope of the problems, and to enforce the law as needed to bring them into shape, which is long overdue.
Now, going forward, you're going to have a much better process and procedure, but we have a whole category of Americans who are still caught up in the old system.
Yep.
And let me ask a question, non-rhetorical, is that you were not involved with OCC and the Federal Reserve in this settlement that proposed to modify mortgages and compensate people for illegal foreclosures. Were you involved at all?
No, we were not involved. I will say that at the time all of that began to unfold, I started as Attorney General of Ohio, and we did see the problems, the robo-signing and all the rest. I then joined the Bureau, and we had a transition period where we were not yet an independent agency. But our role in this, which is a going forward role, it's not so much a looking backward role, but I want to stress when I say going forward, everybody who's caught up in this situation, as soon as our rules take effect, are governed by those rules. It doesn't matter that the mortgage was entered into 3 or 5 or 8 years ago. And the examinations that we're in process right now are examining the problems right now. Other processes that are looking back to things from several years ago, that's a different issue. But for us, the present and the future is very much the agenda Congress has given us, and we're going to be aggressive about trying to fix these problems. I also wanted to mention, and I just thank you for the efforts you made and your colleagues on the changes in the Military Lending Act. I know you and your staff have been inquiring of us how it's coming to implement those. It's coming well. We're working with multiple agencies, including, of course, centrally the Department of Defense, and I think we will implement those changes in the law in the manner in which Congress intended.
Thank you very much. Thank you, Mr. Chairman.
Senator Shelby.
Thank you. Mr. Cordray, good morning.
Good morning.
The Financial Stability Oversight Council, of which CFPB director, and you're the director now, is a member, was given broad authority to eliminate market expectations that any American financial firm is too big to fail. You're very familiar with this. Do you agree that as a member of FSOC that you have a responsibility to contribute to these discussions and help identify threats to our financial system?
That's responsibility Congress has given me by law, yes.
So you believe you have that responsibility?
I believe I do, yes.
Do you believe that all systemic risks have been contained and too big to fail expectations that large institutions will not be allowed to fail have ended? Or still is there some threats out there?
Well, my perspective on this is sort of limited and more recent. I was not here in Washington and not directly involved in the events of the financial crisis. I was the treasurer of Ohio at the time, overseeing billions of dollars in public finances. But what I will say is what's clear to me from my work on the FSOC thus far, tremendous work is in progress, tremendous strides have been made, and I think the framework is both there and being put in place more specifically to address those threats to the system.
Do you basically support limiting the size of banks as proposed by Senator Brown and Senator Vitter?
So I think that's a policy call for the Congress. I mean, my job under the law is to examine those banks for compliance with consumer protection laws, and that's what we're focused on doing. Whatever structure Congress would impose or influence in the banking industry, we will adapt to that and do our job. We do have $4 trillion banking institutions that are challenging institutions. They're in multiple product lines, and we are pretty much continuous in our presence supervising them. But I would say that we're focused on doing our work, and I think those legislative debates will obviously proceed, and you all will make your judgments, and we will follow them.
Do you basically believe that we should, and you should, as an insider, eliminate as much as possible systemic risk?
I think we should do our best to minimize systemic risk. I don't know that you can eliminate it entirely, but I think you can certainly, by being conscious of it, be more prepared, help, and that minimizes the risk. And from there, you do the best you can. I will say that the wisdom of Congress in the law of placing me as representative of my bureau on the FSOC, which is, of course, the body that could veto our regulations if they strongly disagreed with them, I think has been very helpful to me, both in understanding the perspective of that body and in having the chance to work together with my colleagues so that I can understand their point of view and they can see and understand the work we're trying to do that Congress has tasked us with.
Last Congress, I asked the inspectors general of a number of financial regulators to review the economic analysis performed by the agencies under their supervision. The IGs reported back that to the extent economic analysis is performed, it is often focused on compliance costs rather than looking at the effects the rules will have on economic growth and job creation. Determining compliance costs is critically important. We know that. But it's just one component of the overall economic impact. Do you believe it's important for regulators to understand the macroeconomic impact of rulemaking activities?
I do, and for us, that's been in particular understanding the effects on access to credit and the effects on smaller providers and larger providers. But I would go back to my discussion with Senators Crapo and Johans. We can't have that understanding. We can't do that work if we don't have the information on which to make those judgments. But I do think it's critical for us to do that, Senator, yes.
Dodd-Frank expressly requires the CFPB to evaluate the costs and benefits of any proposed rule. You're familiar with that, I know.
Yeah, yes.
If your economic analysis determines that a rule's costs outweigh its benefits, do you think the rules should still be implemented, rewritten, withdrawn, or redebated, or what?
So my sense of why Congress tells us to do analysis of things like benefits, costs, impacts on smaller providers, impacts on access to credit, rural areas, is because Congress intends, and I think has made it very clear, that we should take into account our judgments about that in deciding whether to proceed with a rule or how to write that rule. It may be that a rule in one form would have negative impacts there, but if you modify it a bit, then it improves. So Our specific provision is 1022 of Title 10 of Dodd-Frank, and it specifies how we're to go about this. We've been very faithful to that. It does, again, require information and data in order to do that work properly. But I think that the dilemma we might find is if Congress has required us to do a particular rule, and we found that the costs and benefits, were troublesome, then we can try to write the rules somewhat differently, but obviously within the confines that Congress gave us, or we could always come back and talk to you all about it. That would be a troublesome area. But where we have discretion, the costs and benefits are something that I think should definitely guide our policy judgments.
But in addition to analysis, which you need data and everything, we understand that to make a good judgment, you need objectivity of the whole situation, do you not?
You need to try to have that. I try to have that. I hope that we do. I think one way we can get there is by listening closely and being very accessible to all viewpoints, to using the processes that Congress gives us as much as Congress has done so. So do the analysis, do the notice and comment rulemaking where people have a lot of access to us. In our case, where appropriate, where the law requires to do the SBREFA panels, which we have found useful to us. All of those things, obviously the processes are provided, I assume, to try to improve our rulemaking so we don't go off the rails and do something that's detrimental to the economy or detrimental to consumers. And I have no desire to do that. I want to carry out the task Congress has given us to the best of our ability. I want you all to feel when you look and see what we've done, that you can be proud of what we've done and that it reasonably reflects what your intentions were. And if it doesn't, I know I'm going to hear from you.
Thank you. Thank you, Mr.
Senator Brown.
Mr. Cordray, it's nice to see you again. Welcome back in front of our committee. You're at least twice a year visit. So we've talked about many of these things that never in our history has someone been in many ways held hostage, a qualified nominee of the president, because a significant number of members of the Senate, pretty much all of one party, don't like the structure of the agency or wish the agency didn't exist. I guess this is the second time in history. You were the first time in history a year or so ago. Senator McConnell said the other day, if he had his way, we wouldn't have this agency at all. I want to talk about, though, accountability, because they lay this all at the feet of the issue of accountability. Understanding that there is an FSOC veto over what you do, understanding, unlike most people that in the agencies, that you issue a report and come to this Congress at least twice a year, versus if you went through the normal Administrative Procedure Act. Make that contrast for me, your accountability as this agency is set up, as the CFPB is set up, versus that kind of accountability that other similar agencies might have.
So, Senator, I think we're all accountable in very fundamental respects. I think we're all accountable to the Congress, which can, of course, always change the law and has provided the law that we are required to implement faithfully. We're all subject to court oversight. If we adopt rules, there's specific processes we have to follow, and the courts can look over our shoulder and make sure we did that. They can also review the rules for substance. Then we're subject to oversight by the Congress directly, as in hearings of this sort. Now, in that regard, the Bureau is special. I mean, there were special concerns about the Bureau, and it showed up in special structural constraints on the Bureau. Number one, we are unique among the federal agencies in that our rules can be subject to a veto by other agencies, even aside from also potentially being reviewed and overturned, if appropriate, by the courts. We are subject to a GAO audit of our finances, as opposed to, in general, most agencies and departments, the GAO audit is of the federal government as a whole, not specific to their finances. We're subject to an independent audit annually of our operations. That's, again, not something that is done at other agencies. I'm happy to say that those audits have been clean audits to date, even as we're building up and trying to build the agency as well as perform our duties. We are subject, unlike the other banking agencies, to a hard budget cap. and then told that if we need additional money, we can come to Congress for an appropriation. So we're sort of quasi-appropriated, and as it is. We're required to produce a semi-annual report and to testify, therefore, twice a year in front of the Senate Banking Committee as an oversight, and also the House Financial Services Committee as an oversight on that report. And I want the senators not to underestimate yourselves. This is meaningful oversight. When I sit here and have to answer your questions, it's not just fun and games for me. I take it very seriously. I'm accountable to you. And if I can't answer your questions and respond to your concerns in a way that is persuasive to you, then I have a problem and an issue, and it's a meaningful issue for me. So, there are many ways in which the Bureau is specifically constrained beyond other agencies. We accept that. We're doing our best to do our work within that. And frankly, I don't mind having strong oversight. It helps me make sure that I can sleep at night, that we're, for the most part, I hope, doing the right things.
Thanks. I don't think too many of us thought this was fun and games for you to come in front of these committees. Not the first term phrase that came to mind. I want to follow up a moment on my last minute or so on Senator Johnson's questions about this private student loan market. How does we've done the recent report by the Student Loan Ombudsman has been important. My subcommittee, as you know, held a hearing examining this issue last year. How will your new supervision of large private student loan servicers address some of the concerns described in these reports and these hearings?
I think, first of all, it's a meaningful change, Senator, to have an agency that goes in and examines very specifically for compliance with the law in an area. It means the institution has to be on their toes, and it means we have direct access to the information we need to assess whether the laws are being followed. And that already changes attention and heightens consciousness, and I believe changes behavior in these institutions, the examination function itself. On the private student loans, we also now, as I said, we've put in place the mechanism to be able to now examine the student loan servicers, the ones who are actually dealing with the outstanding student loans, and either getting the right information to people or not, either processing these loans properly or not. And we do hear a lot of complaints about that, so we'll be aggressive about going in and making sure that things are being handled correctly, or if they're not, that they're put right. But the whole student loan problem is a problem, should be of deep concern to this body. These are young people that we should care a great deal about. They're the ones with ambition and aspiration and dreams, and they're getting saddled with debt that they don't understand often, and they tell us that later, that they wish they'd known the difference between a private student loan and a federal student loan. And it's holding them back, and it's making them unable to rise and succeed and become leaders in our society, and it's a significant problem. And we're going to be doing everything we can to address it at the Bureau.
Senator Warren.
Thank you, Mr. Chairman. Thank you, Ranking Member. I just want to say this is my first full day back in the United States Senate since the attacks on Boston, and that many here, many of my colleagues, the staff, members of the press, members of the public, have held Boston in your prayers for the last week. And on behalf of myself, on behalf of the people of the city of Boston, I want to say thank you very much. You know, it's been a hard week, but the people of Boston are fighters, and we're strong, and we will get through this. But thank you all. Director Cordray, for more than a year now, a minority in the Senate has been trying to block your nomination, trying to reopen a debate that was resolved 3 years ago. For 3 years, they tried to kill that agency, and they lost that vote 3 years ago. Then they fought to weaken the agency. They lost that fight because they didn't have the votes. And today they know they still don't have the votes to undercut the agency. So they are determined to hold your nomination hostage. It seems pretty clear what's going on here. This isn't about your qualifications or your performance. Your work has been praised by both consumer groups and by industry groups. This is about a minority that doesn't want a watchdog that will keep an eye on the big banks to make sure they don't cheat their customers. Now, why would big banks and their friends not like the consumer agency? You know, I take a look at a few of the things you've done in just the last couple of years. You've recovered nearly $500 million for consumers who were tricked by big credit card companies. You created a complaint system that has handled 91,000 complaints last year alone. You built a tool to help students and their families compare the costs of college, what you were just talking about, so they have better information when they're making a big financial commitment. You've put together a tough-as-nails office to look out for service members and military families and help protect them from financial predators, including helping service members whose homes were illegally foreclosed upon. And you issued new mortgage rules that have been widely praised as balanced and fair, and that are clamping down on the kinds of sleazy practices that cost millions of families their homes. You know, that's an extraordinary set of accomplishments for an agency that's only been around for a few years. And I think it explains why this agency is so important. I commend you in your work. I think that enforcement of the law, particularly the laws to protect consumers, to make sure that big banks follow the rules, I think that's really important. And Director Cordray, you've already proven that the consumer agency is independent and effective, that you can be fair and be tough. But before your current position, you were the head of enforcement at the Consumer Financial Protection Bureau, and before that, the Attorney General for the state of Ohio. So you know more than just about anyone else about strong enforcement of the laws. So in your experience as head of enforcement at CFPB and as Attorney General for Ohio, in order to enforce the law effectively, how important is it that you have adequate resources, adequate funding, and adequate information?
I would say all of those things are essential. I think if you don't have the information, you don't know what to do. If you have the information but you don't have the resources, you know what to do but you can't do it. And I think you also have to have the will to understand and be motivated by the desired result, which is people need to understand that they have to obey the law. And as I used to say when I was Attorney General of Ohio, and I feel the same way now, nobody is so high and mighty that they're above the law, and nobody is so undistinguished that the law doesn't apply to them equally with everyone else. And that's a bedrock of our society. It's been a strength of the American society and American system for more than 200 years. And we have to make sure that we maintain it. And that's part of my responsibility at this Bureau, and it's part of the Congress's responsibility as well. You pass the laws. We're supposed to enforce the laws within our jurisdiction. I take it very seriously. To me, it's a calling. I actually work closely with criminal law enforcement, police, sheriffs, prosecutors as Attorney General of Ohio, and it's a very important responsibility to keep faith with the American people that we not only have a democratic system, but we have a rule of law and that it's maintained.
Well, thank you very much, Director Cordray. I appreciate the work that you're doing and that you're out there to make sure that these large financial institutions don't just treat a fine as a cost of doing business, but that they actually change their behavior, and that consumers are entering a level playing field and they have a real chance in these markets. I appreciate that. Did you want to add something? We're out of time, but did you want
I would just say that when you're dealing with a particular situation where there's been violation of law, there's sort of four pieces to it as I see it from the standpoint of this Bureau. Actually, there's five. There's making sure that what's being done is not done in the future, stopping it, whether it's injunctive relief or banning someone from the marketplace for a period of time, both of which we have done. It means restitution to consumers so that they're as much as possible made whole for the harm that was done them that should not have occurred, because it only occurred because of a violation of the law. There are penalties that can be imposed when restitution isn't enough to sort of teach the lesson and see to it that people are deterred from doing this in the future, that they don't just feel like, I got caught this time, but when I get away with it, that doesn't cost me anything. And I think finally there are cases of where criminal referrals would be appropriate, and we want to be very careful about that, but there are going to be cases of that sort.
Good. Thank you very much, Director Cordray. I'm glad you're out there fighting on behalf of consumers, and there will be those of us here who will be fighting on your behalf and on behalf of this little agency.
I appreciate that.
We'll go briefly to a second round of questions. Director Cordray, I understand that the CFPB is conducting exams of larger institutions in coordination with other federal or state regulators. What steps does the CFPB take to ensure that the exams and information requests are well coordinated with other regulators and not duplicative?
So thank you, Mr. Chairman. This is an area where I think the Bureau has done very well, and I'll just say that. And I think it's in part because as the Bureau got underway, there was a point made to bring some people in who came from a state government background. I myself came from a state government background, but here I'm thinking not of someone like myself from an Attorney General office, although that's important and relevant, but people who came from a state banking background, state financial services background. So we have had terrific relationships with the CSBS, the Conference of State Banking Superintendents. We have collaborated closely with them. There have been matters where we've worked directly with them. There has been a process of coordination and information sharing with them. At last count, I believe we have agreements with 61 different banking and financial service agencies in 49 states. Some states have multiple agencies. And I think that that relationship is good. We lean on them in some respects. They can now lean on us in some respects. We bring joint resources to the problems. And I've been really pleased at their attitude toward working with us, and I think our attitude toward working with them.
With regard to community banks and credit unions that are not subject to the CFPB's examination authority, what measures have you taken to ensure that your rules are clearly interpreted by the prudential regulators during their exams? Does the CFPB plan to continue releasing small entity compliance guides, as has been done twice already? When might we expect to see more small entity guides on the other mortgage rules?
So thank you, Mr. Chairman. I've got about 3 different answers to that question. I'll try to go fast. On the small entity compliance guides, this is something we take very seriously, and we know it's important, and we've been told this over and over by both smaller institutions and the trade associations that represent them, like ICBA and NAFQ and CUNA. That means taking our rules. Senator Crapo initially mentioned 2,500 pages of rules issued in January. That's 2,500 pages of text. A lot of that is preamble. A lot of that is cost-benefit analysis. I think when you actually translate it into the Federal Register, it was less than 100 pages of rules, and these were 7 major mortgage rules that Congress directed us to do. Nonetheless, I don't think people enjoy reading the Federal Register. I don't, and I'm a lawyer. So we have been translating those into plain English and compliance guides, what you need to know, what you need to do. That's becoming a standard for us on every rule that we publish, and we're doing web and video things. Some people like to get the information that way, and a variety of things. In terms of making sure that our regulations are administered and examined around in the spirit in which they're intended, we work closely through a body that I'd never heard of before I came to this Bureau called the FFIEC, the Federal Financial Institutions Examination Council, where we are taking the lead on writing a first draft of what the examination work would look like around these rules, and then collaborating with the other agencies to get that in place and to publish it so it's transparent to institutions. I think it's only fair to them, and they have a right to expect that and demand it. We're actually, I was surprised to hear the other day, we're well on track that we're going to have, I think, the examination modules or whatever you would call them ready by I think June of this year, even though the rules don't take effect till next January. That's light warp speed for an interagency group like that, and it will help us make sure that we're on the same page. And as we publish them, if institutions have reactions or think we're not getting something quite right, they'll have a chance to kibitz in on that. Finally, since we don't actually examine the smaller credit unions and community banks, I made it a point to create a community bank advisory council and a credit union advisory council, so we do hear directly from them and fill in that what otherwise is a gap in not having that day-to-day direct hands-on experience with them. And that's been very helpful to us. It's been very insightful for our work.
Senator Crapo.
Thank you very much, Mr. Chairman. And Mr. Cordray, I want to go right back to the issues we were talking about before. And I want to phrase or characterize the question I'm asking with a bit of a statement first, because I do understand your point about needing to have data in order to make effective cost-benefit analysis and achieve the right balance in regulation. And I do understand that we have a dynamic developing in the world right now with regard to what's been called big data or big data. In terms of the phenomenal rate of collection of data about people going on in the private sector.
It's the way of the world.
Yeah, it is, and it's happening. That being said, I think there still are some very serious and real questions that need to be answered, as well as perhaps dealt with in terms of the way that the federal government involves itself in this entire process, if at all. And just a couple of observations. Nobody in the private sector has the right or the power that the federal government has to force the release of information. My understanding is that you're not just purchasing the data we're talking about from private sector collectors, but that in the examination process and in other aspects of the collection, banks, other financial institutions are being required to provide data that they couldn't be required to provide by a private sector operator. So in other words, the power of the government is being put behind this data collection effort, as I understand it. Just let me go on, and in fact, I'm going to ask something at the end here for that.
Okay.
Will go beyond this hearing, but hopefully get us to a much fuller explanation of how and where we are going here. In another context, under Gramm-Leach-Bliley, as I mentioned, and in many of the interactions between financial institutions and their customers, there is an opt-out right, which does not appear to exist in the functions that are currently being undertaken by the CFPB. And the bottom line here, as I see it, is that although I understand the need to collect data, I'm very concerned about the heavy hand and the power of the government being brought behind a phenomenally new, big data collection effort. In your response to one of my first questions on this, you indicated that you weren't sure whether the CFPB or some other actor, some other contractor, could go back into all of this data and reconstruct it in a way that it was not anonymized. I actually am very concerned about that, and now we have a government agency that is potentially capable, I think, of getting that kind of information that is currently anonymized, but we just have to take the word of the agency, like consumers today have to take the word of private sector people that they are buying their cell phones from or working with on the internet or what have you, that they're not collecting this information in an individual specific fashion. And frankly, people don't have a high level of confidence that that's not happening. And I don't have a high level of confidence that it's not possible for the agency to get access to this information on a specific basis. So for all of these reasons about the data collection that's being undertaken, I simply ask you this question and then make this suggestion. Has the CFPB done an internal legal analysis about this whole data collection process? And what I'm getting at here is that Dodd-Frank clearly prohibits the CFPB from collecting personally identifiable information. And if all of the pieces of information that the CFPB is collecting right now could be utilized to engage in personal identification, then perhaps that could violate the law. But more specifically, it would be helpful to know what steps, what potential is there. I'm actually relying right now on this question on a Bloomberg article That's the extent to which I know that we know as the public about what's happening. And so I think that it would be very helpful for us to know exactly how this data is being collected, not just who's being contracted to collect it or whether it's being collected in examination processes, but how it's being collected and how it might be used. And then I think the ultimate conclusion should be reached, and that is whether its collection is in violation of the Dodd-Frank prohibition. If you'd like to comment, please.
I would, Senator. Thank you, Ranking Member Crapo. A long question, and I'll try to give you only a medium-long answer, but there's a number of pieces in that question. First of all, I don't think it is correct. It's not correct under the law that the Bureau cannot collect personally identifiable information. When somebody commits a consumer complaint to us, they put their name and address. The issue under the law is that we're not supposed to disclose personally identifiable information. And we've been very careful not to do that and not to violate people's privacy in that regard. But I want to go back to what you said, and I think, frankly, a lot of what you just laid out is a very fair line of inquiry, and it's something that I think I share your concern, and if I were looking from the outside at government, I share the concern as well. So first of all, in terms of forced collection of data, that's for the most part not what the Bureau is doing. As I mentioned, the credit card data that we're talking about we get from Argus. We buy that. Many people buy that from Argus. That's a very common thing. There's nothing really special about that. No new ground that the Bureau is plowing on that. The credit reporting data, we're buying it from the same source that the Federal Reserve Bank of New York has been buying it from for years and using to develop their reports that have been very insightful on credit reporting and credit in the economy. There are times where, as we examine institutions, we have to begin by getting a baseline of data from the institution in order to then calibrate what exactly is going on there. Are they complying with the law? What are they doing? I think there may be times, there clearly have been times where we think we need a certain amount of information to do our job. The institution may feel like we're asking for more information than we need to do our job. I think those are reasonable differences of viewpoint that have to get worked out as we work together, and I think for the most part they do. But I would say this, I think that you have fair issues you're raising. I would want to have the chance to have our staff get you a very specific answer to your question about whether the anonymized data could be somehow reverse engineered in a way that affects somebody's individual privacy. I do think that that's not an issue. If it were, it would have been an issue already with other agencies gathering that same information and using it, which they've been doing for years. It's just new. It's new to the Bureau, but not new to the process. But I'd also like to have a chance to. I'll have our staff spend time with your staff to dig into some of these issues to try to understand in more detail what some of your concerns are. Happy to do that with your colleagues as well, or their staffs. I want to dispel any concern on this front. I think that what we're doing as an agency is we're trying to gather the kind of information we need to do our job the way you would expect us to do it, to be able to do careful cost-benefit analysis, which we can't do without sufficient information, to do the kind of reports to Congress that you expect from us that will be credible and that will give you a basis for going forward and making policy, making judgments about things like the CARD Act, which we're going to give you a report later this year on how that has been implemented and what some of the issues are with that, both factual and then perhaps normative. And I know you want that. You've required us to do that. Can't do it without data and information. So again, that's all we're trying to do, is to do our job. If there are concerns about some of the details of how that information is handled, our Inspector General looks at these things. The GAO audits look at our operations. You all are free to look at them. We want to be an open book. And if there are concerns, then we want to try to address them.
Well, thank you. My time is obviously up, and so I can't continue with this here, but I would like to continue this with you, and I would like to ask you to take seriously the request that I make that there be an internal legal analysis that is shared with us about all the details of how this project is operating, or this operation is being undertaken, and how it fits with the requirements of Dodd-Frank.
You tell us what you want, sir, and we'll get it to you.
Thank you.
Yeah.
Senator Hagan.
Thank you, Mr. Chairman. And Director Cordray, as I said at the beginning of the hearing, it's always a pleasure to see you, and I feel like we see you quite a bit. But thank you for the job that you're doing. I want to associate myself with Chairman Johnson's question about the rural definition. And I've also heard questions and concerns about this definition. I was surprised to see in North Carolina several counties labeled non-rural, especially in the northeastern part of our state, which is quite rural. And they are Camden County and Currituck County. And I appreciate the CFBP talking, looking at this and taking a hard look at this issue of non-rural designation. But I want to talk to you about financial literacy. I've always been a huge supporter of teaching financial literacy to our students in the grades 6 through 12 or even earlier. And as we've discussed in the past, I've introduced legislation in Congress when I was in the state Senate in North Carolina. I made a mandatory requirement that we teach financial literacy. It hasn't been as strong as I would prefer. And I think I keep saying this is not rocket science. We just don't teach it. Later this week, I serve on the Health, Education, Labor, and Pensions Committee, and am now chairing a subcommittee for families and children, and we'll actually be having a hearing titled The Economic Importance of Financial Literacy Education for Students. Can you talk about what the CFPB is doing to improve financial literacy through the Consumer Education and Engagement Division and the Office of Financial Education? And talk about it, and then what improvement you see taking place.
Thank you for the question, Senator. This has also been a personal passion of mine, and I think it's hard to come face to face with these issues and see how they affect individuals and households and not be passionate about this subject. When I was a local official in Ohio and then a state official, as a local official, I had to deal with folks who were delinquent on their real estate taxes. And, you know, there's a perception among the public that people who don't pay on time are deadbeats, and some of them are, and some of them just don't want to take their responsibility seriously. But for the most part, that's not the case. People are victims of either bad luck or bad decisions or poor choices, but often just bad fortune. You know, every day people die in families across the United States. You always hope it's not your family, but it's somebody's family, or somebody gets injured where they can't work, or somebody, you know, the marriage falls apart and there's a divorce, and now there's two households where there used to be one, and maybe expenses and arguing over the assets. All these things disrupt people's lives. What I saw was that in all those instances, issues were made worse by the fact that people really didn't understand, and they knew they didn't understand a lot of the decisions they were making, financial decisions. And they keenly felt the self-consciousness of not knowing what they were necessarily doing, or recognizing a year later that they made a bad choice about that mortgage or about that student loan. And I think that one of the things that we absolutely have to do as a Bureau, it is fundamental for us, and I'm going to be much more aggressive in the coming year in using the bully pulpit and pushing on and collaborating with officials around the country. We have to teach people and make available to them the tools so that they can learn more about how to handle their personal finances. You can't have a free market economy which rests on individual decision-making by millions and millions of Americans in which they aren't capable of making sound decisions for themselves. And we don't want to have a society where people make decisions and several years later come to our tell your story line, as they do every day, and talk about how they regret the decision they made. And if they had known the difference between a private student loan and a federal loan, they wouldn't have done what they did, but now they're stuck with it. And it's a tragedy in this country that we would not consciously teach young people how to handle themselves when they go out in the world. They may not listen, they may not do it, but the fact that we don't, as you say, we don't even teach it is just, it's a scandal. And in Ohio, I worked for the same thing. We have now a requirement in Ohio that you have to have personal finance education before you graduate. That was a struggle. The next struggle, of course, is what you said. What does that actually mean and how much is it? I'm told just yesterday we had visitors in on this subject, a woman from University of Cincinnati, that in many districts that's going to be just a 6-week thing folded in to some other class, which is something. It's better than nothing. And 6 weeks is certainly better than 0. But we have to take this seriously. We mandate teaching of history. We mandate teaching of government so people can be good citizens. We also have to mandate a basic understanding of finance and a recognition there are going to be certain decisions you'll come across in your life that will be life-changing. What you do about that mortgage, what you do about trying to pay for education. And getting those right is really not a casual matter, and it's something we plan to be a trusted source for the resources for people to try to grapple with those decisions, as we're doing right now with our paying for college module. I'm sorry, I could talk for 20 minutes about this and would if you didn't stop me, but I think it's not a partisan issue. It's not something Republicans or Democrats, this was home economics in the old days, and it's just basics of being able to operate on your own, and we all know, as I always like to put it, brothers and sisters, sons and daughters, cousins, nephews, nieces that we know are not as well equipped as they should be, and we have a responsibility for that.
Well,
We as a bureau do.
I think you should take the bully pulpit and really use it, because I can see your passion. I have it too, because I've seen so many people that have gotten into so much trouble because they simply weren't educated. And I say what they weren't educated. They're very, very smart people, but they didn't understand the dynamics. And primarily, they don't understand debt. Debt can be very good to increase your net worth, but not to build up with many material items that at the end of the day are not of value.
It's complicated for people, let's face it. I used to say when I was the state treasurer of Ohio and I was responsible for billions of dollars of public funds, and I hoped I was doing a good job at making decisions about keeping them safe, and this was in the throes of the crisis of 2007-8, but I would go out and talk about this issue and I would say, frankly, I know there are many things I don't know that I wish I knew more about. Am I saving the right balance of savings toward retirement? Do I have the right balance of insurance on my car or home or life, or am I getting that right? Do we understand enough about our credit reports? There's just a lot of things that are complicated for people, and for us at the Bureau, it's about reducing the complexity. That's a big part of what we're trying to do, know before you owe, and the kind of simplification and transparency of these decisions, and then building more capability among people and giving them the ability to have tools. And of course, people will make their own decisions for themselves. It's not going to be some nanny state deciding what you do with your mortgage. But you're the one that's going to have to live with it.
I believe my time is up.
Yeah.
Thank you.
Sorry.
Senator Moran.
Mr. Chairman, thank you very much. Mr. Cordray, thank you for being here. About a month ago, the CFPB released a statement stating that U.S. lenders could face litigation if they fund loans made by auto dealers that are later found to be discriminatory. It's a huge component of our economy. I think the number is about $90 billion. I'd be interested in knowing, I don't have an opinion at this point about whether the finding is right or not, but tell me about the analysis that was done to arrive at that conclusion. Do you have the methodology of this decision available? And if so, what would you be able to share with that process, either today or later with me in my office?
Thank you, Senator, for the question. So the issue of indirect auto lending is one that at this point we addressed in a very general way with a legal analysis that leads to a legal conclusion. Is not yet a factual conclusion about any particular instance, although there is a lot to be heard about this area as you go around the country and listen to people, both lenders and borrowers, both. The legal point we made, which I think is straightforward, is that if you're a lender and you set up a lending program, and that program involves third parties making some decisions in the program, but it's your program, you're the one lending the money, then you remain responsible under federal law for complying with the federal law. Same in the mortgage field. If you set up a lending program as say a bank lender of mortgages, and you set it up so that some of the loans are made directly by your employees and some are made indirectly by brokers or others, you remain responsible for your program, and you have to comply with the law. I think it was a fairly straightforward point, but we were hearing from some folks who didn't think that was necessarily so, that somehow if there's a third party involved, that somehow it becomes entirely their responsibility and not the lender's responsibility. I don't think that's right. We'd be happy to share the legal analysis with your staff separately if you'd like.
So at this point, it was just the legal analysis.
It was a bulletin that we put out, yes.
And you indicated earlier about cost-benefit analysis, and that would come later in determining whether or not there are enforcement actions or regulations to be written?
Yeah, if we were to write regulations, and that's a possibility, there would be cost-benefit analysis as required by 1022 of our statute to have to do. If we're undertaking enforcement actions, that's a different issue. It's a matter of investigating the facts, setting them against the law. It's something I know you're very familiar with. So that's what that process would be.
Okay, that answers my question. Thank you very much.
Thank you, sir.
Thank you, Mr. Chairman.
Senator Warren.
Thank you, Mr. Chairman. Director Cordray, I understand that the Consumer Financial Protection Bureau is required by Dodd-Frank to complete a study of mandatory arbitration. Is that right?
It is, yes.
When do you anticipate you're going to have that finished?
I don't know that I can give you a specific date, but it's one of the things that Congress has specifically required of us. So it's a task Congress has given us. And so when we set our priorities, tasks Congress has given us tend to take priority over tasks we give ourselves. I would say we are already in process, well in process in putting together that study. What Congress said in our statute is two things. They said that we were to do a study of arbitration as it affects consumer financial products and services. And there are arbitration clauses, as I know you know, in a number of different types of consumer lending contracts, and it's something that has spread in the last couple of decades, certainly. And then if we're going to adopt policy, regulations, or some provision about what to do about arbitration clauses of that sort affecting consumers, it should be based on the results of our study. So, you could argue this is the same kind of thing Congress says, do a cost-benefit analysis. Here they were much more specific. They said, do a full study. Really look at this, really dig into it, really try to understand how arbitration proceedings differ from court proceedings, what kind of rights they give to consumers, what kind of rights they may take away, what kind of results are gotten there. Is that a fair system? Is it reflective of the merits of the issues, or are there systematic procedural biases that make it difficult for consumers to get through them? Who pays for the arbitration, et cetera? And that can vary. All of those things, study that carefully, and then do policy. They wanted us to be very rigorous about this, and we're going to do that. I would estimate, and I hate to estimate dates because then people hold me to it, but I feel quite sure that we're going to have some of this analysis out publicly this year. Whether it will all be out publicly this year, I'm not sure, but we're trying to be very careful as to what we're doing, and we know that there's a lot riding on it, because then it will be consideration of policy following immediately after.
Well, I appreciate that you take this seriously, and I'm looking forward to the study as soon as you can possibly get it out. I want to ask you about one other thing. I know that you've set up a consumer complaint process, and that it has some quite innovative features, and that you've also made it a quite transparent process. I wonder if you could tell us just a little bit about what you've set up at the Consumer Bureau and what you found, what the response of the banks has been, and how this information is being used.
I actually think we're tracking a precedent that has existed now for about 40 years, which is the National Highway Traffic Safety Administration. They started publishing data on auto safety back in the early 70s, and it was resisted strenuously by the auto companies at the time. The sky was going to fall if people actually knew how safe or unsafe their vehicles were. fast forward almost 40 years later now, and that is standard. It is accepted. It has become the basis for consumers making decisions. It's been the basis for companies thinking and looking more carefully at their own operations and doing recalls of products that are, that are questioned. And it has been, I think, a success. I've seen discussion in the last year or two as we were focusing on our work here that the auto companies now not only accept it but embrace it. They think it's made their products better, and it's minimized litigation risk for them, which is another way it can save companies money to pay attention to how their customers are being treated. So I think it's the same thing in the financial services area. So we get complaints. We're taking them on a range of subjects now, an increasing range of issues: mortgages, credit cards, auto loans, student loans, bank accounts, now credit reports. Soon remittance transfers. Maybe that's actually out already. I'm sometimes not clear what happened last week and what's happening next week. But and out of that data, we are publishing it. And that means we find it valuable in our work. It's informative to us. So we think it will be informative to companies. They can look at their competitors. Who's doing better than I am? Who's doing worse? Why are they doing better? How can I improve? That's the kind of competitive dynamic we want to foster. And thirdly, for consumers to be able to have this information and look at it and potentially make decisions on it. Maybe somebody will use that database and start rating financial products, as is done with cars on auto safety, as I think likely will be done over time with the Consumer Product Safety Commission, as they put out information on which toys and other household products, cribs, toasters, you name it, are safe. This is the kind of information that if I'm a consumer and I'm a member of the public, and the members of the public really are the ones who should and do run our government, not us. I would want to have that information. I wouldn't want my officials to hoard it. I'd want them to share it with me. I might use it, I might not, but if I can find some benefit in it, then I would expect them to share it with me.
And Director Cordray, I know I'm out of time, but let me just ask, you talk about the effects on the market overall, but for individual consumers who file complaints, those complaints are then forwarded to the financial institutions. Yep. Have some people actually gotten money back?
Many. By no means all. A complaint is just that. It's a complaint. Sometimes it's valid, sometimes it's not. Sometimes people think it's valid, but it's based on a misunderstanding of the facts or the law. But there have been many situations, millions of dollars have been returned to consumers through our consumer response line. And notably, and more important, and this is something the companies wanted us to make a change, and we did, to stress this, they often give non-monetary relief. You can't put a price tag on it, but if you get something cleared up in your credit report, or you don't have to keep calling for another 3 months to get that thing fixed on your bank account, that's meaningful relief for people, and it's very satisfying to them. So we've had many instances of both of those. We've had a lot of matters referred to us by members of Congress and members of this panel that we've been able to resolve, and I think it's been very satisfactory. I know there are some that we've not been able to resolve, and I apologize for those. But we do our best, just as I know your staffs do their best, to help people, and that's part of what our job is.
Good. Thank you. Thank you, Mr. Chairman.
I'll turn to Senator Crapo for a brief statement.
Thank you, Mr. Chairman. I just wanted to follow up, Mr. Cordray. This isn't going to be a question because we'll get together with you afterwards on the issues that we did. But first of all, we didn't get into a number of the questions that I raised in my opening statement, which we talked about, and so I will submit those questions to you if you would respond to them.
Sure will.
But you and I think we may have a disagreement or a different understanding, at least, as to what the Dodd-Frank statute requires. As I read it, and I'm reading the statute, it says the Bureau may not use its authorities under this paragraph to obtain records from covered persons and service providers participating in consumer financial services markets for purposes of gathering or analyzing the personally identifiable financial information of consumers. So those are the exact words of the statute. By the way, in other parts of the statute leading up to that, it talks about voluntary information being provided by consumers, and so I again refer to my opt-out suggestion. But I'd like to get with you, and we will do that, and urge you to provide the kind of information as well as legal analysis about the department's processes here that can help us address some of these issues.
We'll certainly do that. We'd like to put your mind at ease on that. I do think what you read is part of the statute, absolutely. There are other ways in which the Bureau gets personally identifiable information, such as, for example, when people file their consumer complaints.
But that's a voluntary action
yeah.
by the consumer.
We're not really interested in personally identifiable information. For us, it's just a hassle. It means we have to make sure that it's being properly handled, that it's not being disclosed, that we have to devote a lot of time and attention to guarding it carefully and making sure it's handled the way every other agency under federal law has to handle it. What's insightful to us is the anonymized information that tells us about consumer behavior, consumer harm, consumer benefit, and that's the information we need. We don't really want to know about you personally. We want to know about consumers in general.
And I trust that that is exactly what you're all about, but I don't think that just the assurance of the agency that they're not interested in it is really what we're trying to achieve here.
Understood. Yep. And we'll be happy to work through that to your satisfaction.
Mr. Cordray, I thank you for your testimony today and for your leadership on this important agency. This hearing is adjourned.
Financial Protection Bureau is very important to us to gain insight into what the agency is doing. As I've consistently stated in past hearings, we still have concerns with the structural nature of the agency. We continue to seek a change from the sole directorship to a board-like structure. It is also essential that the agency be a part of the appropriations process. And finally, we believe that the prudential banking regulators should have a formal input into the Bureau's action where those actions affect safety and soundness. And with regard to the President's recess appointment to the CFPB last year, my opinion has not changed. I continue to believe the recess appointment was unconstitutional. Recently, agency officials have pointed out that they've testified more than 30 times before Congress in the past few years. And while this does give Congress an opportunity to hear directly from agency officials and is appreciated, it does not necessarily facilitate the in-depth discussion of the specific issues and concerns that we need. Just last week, Bloomberg ran a lengthy article citing that the CFPB has allocated more than $20 million for collecting and tracking customer credit card and spending habits for more than 10 million Americans. The size of this data collection and the amount of money being spent by the agency are a cause of concern for me, and should be for those Americans whose credit cards, checking accounts, and other financial data are being sent monthly to the CFPB. Last month, I specifically asked the agency about this data collection, but the responses I received downplayed the nature and extent of it. For example, I asked how many consumer accounts the CFPB is monitoring, and the agency declined to provide that information. Now we learn from the press that it is 10 million accounts, and perhaps even more. This lack of candor and transparency of what the agency is doing and how it intends to use this personal financial data is troubling. The Bureau is founded with a mission to watch out for American consumers, not to watch them. Given that the CFPB's Inspector General has already identified data security issues at the Bureau.
Thank you, Senator Crapo. Are there any other members who wish to make a brief opening statement? I want to remind my colleagues that the record will be open for the next 7 days for opening statements and any other materials you'd like to submit. Mr. Richard Cordray, as Director of the Consumer Financial Protection Bureau. Welcome back to the committee, Director Cordray. You may begin your testimony.
Ranking Member Crapo and members of the committee, thank you for inviting me to testify today about the semi-annual report of the Consumer Financial Protection Bureau. My colleagues and I are always happy to testify before the Congress. And Ranking Member, I would hope to have a chance to address each of the issues you raised in turn. If that requires several rounds of questioning, I'm happy to do it. I think there are good answers to all of those issues that you raised. Born out of the worst financial crisis since the Great Depression, the Consumer Bureau is the nation's first federal agency whose sole focus is protecting consumers in the financial marketplace. We're dedicated to improving the lives of everyday Americans and to restoring trust in consumer financial markets. The semi-annual report we're discussing today embodies our work over the last 6 months of 2012. The report illustrates the ways we're using the tools Congress has provided us to empower consumers and promote a fair, transparent, and competitive marketplace for consumer finance. We've taken steps to improve the workings of markets, particularly those in which consumers cannot choose their financial service providers. One such market is debt collection. Concerned about system-wide problems that pose risks to consumers, we gained authority at the beginning of the year to supervise debt collectors directly. The debt collectors covered by our supervisory authority account for over 60% of the industry's annual receipts in that market. Bad actors in this market are a detriment to consumers and to every debt collector that does operate lawfully. We also expanded our supervision program to include the larger credit reporting companies.
That is $425 million back into the hands of harmed consumers and back into the economy. Earlier this year, the CFPB finalized rules to strengthen mortgage standards. This includes the ability to repay provision, which requires lenders to make a good faith effort to determine whether a borrower can make his or her payments. These rules have been generally well received by consumer and industry groups alike, and I applaud the care the CFPB undertook in writing these rules. However, we must ensure that these rules do not have adverse impact on lending in underserved areas, including rural areas. I look forward to hearing from Director Cordray on how this rule will impact rural lending, which is an important issue for many in South Dakota. Finally, Director Cordray, you have made comments about reducing regulatory burden on community banks and credit unions. I continue to be interested in your plans to make sure that rules strike the right balance, protecting consumers while addressing legitimate concerns smaller institutions may have. You have proven day in and day out that you are well qualified for your position. Even my colleagues across the aisle can see this point. I hope we can provide the market the certainty it needs and consumers the cop on the beat they deserve by confirming you quickly. Thank you for your service, and I look forward to our ongoing work with you. With that, I will turn to Ranking Member Crapo.
Thank you, Mr. Chairman, and thank you, Mr. Cordray, for being here with us today. I appreciate it. Mr. Chairman, the semi-annual briefing by the consumer, how can the consumer be assured that this information is indeed safe? With regard to its regulatory role in the past 2 years, the Bureau has issued numerous new rulemakings resulting in significant cumulative burden for affected institutions, especially our small and community banks that often have just a handful of employees. In January alone, the Bureau finalized over 2,500 pages of new rules relating to mortgages through 7 different rulemakings. I'm concerned that without strong cost-benefit analysis and input from small business panels in crafting rules, even well-intentioned rules could make consumer credit more expensive and less affordable. That's why at 2 separate hearings last year, I encouraged the CFPB to conduct a small business panel on the proposed qualified mortgage proposal to try to minimize unintended consequences. Many community bankers now warn that despite limited QM exemptions for smaller institutions, They will no longer offer any mortgages outside the QM criteria, which will restrict their ability to meet the mortgage needs of the communities they serve. Another issue concerning the agency has been identified by the agency's own ombudsman, who recommended the CFPB needed to review and clarify the role of enforcement attorneys who attend supervisory exams. I look forward to hearing from you, Mr. Cordray, about how you plan to address the community bank concerns with the QM rule and how the CFPB is implementing the overall ombudsman's recommendations. Specifically, I would like to hear how the Bureau is handling the examination concern raised by the ombudsman, as well as whether the Bureau is concerned about the effect that the sheer presence of the enforcement attorneys may have on the integrity of the examination process. I firmly believe that if the structure of the agency were changed, then it would become more open and transparent, and many of these issues would not need to be raised by members of Congress. It's my hope that the Congress will move quickly to address and pass these reforms so that the Bureau can do what it was designed to do, and that is to protect the American consumer. Thank you, Mr. Chairman.
Good morning. I call this hearing to order. We have reviewed the CFPB's semi-annual report and are here today to conduct regular oversight of the CFPB. This includes making sure that the agency continues to fulfill its mission of protecting consumers and empowering them to make responsible financial decisions, promoting fair competition in industry, and ensuring full access to financial services for all Americans. Director Cordray, welcome back to the committee. I know you share my commitment to transparency and accountability. In fact, this is the 32nd time that a CFPB official has appeared before Congress in just over 2 years, and your 13th appearance. Rightly so, your agency's outreach and engagement with both consumers and industry representatives has been widely praised. The CFPB has made significant progress in protecting consumers, including students, service members, and older Americans. For example, the CFPB has developed a number of tools related to student lending, including the financial aid shopping sheet that will help students make the best choices as they pursue their dreams. And since the CFPB opened its doors, it has obtained $445 million of consumer free funds.